Hello guys, I am Lavanya Vanga. Welcome to this video. In this video, I will be talking about the components of time series analysis. Time series data help us to understand how things change over the time, and to make the sense of it, we break it down into key components like trend, seasonality, cyclicity. Let's begin by understanding each of this in a simple way. Okay, first of all, I will tell you what is time series analysis. This is the way to analyze data points collected over the time, like temperature, stock prices, or monthly sales figures. By understanding TSA, we can break down complex time-based data into simpler parts, which help us to see patterns and make predictions. So, time series data is the sequence of the data points gathered in a chronological order. For example, if you record the temperature every day, that will be the time series data. So TSA is all about the studying this kind of data to identify patterns such as the trends, drifting cycles, or random noise. When we identify these patterns, we can better understand the data's behavior and even forecast what might happen next, which is very useful in many areas like finance, weather forecasting, or business planning. Now we will see components of time series analysis. The first important component is the trend. The trend shows the overall direction that the data is moving over the long period. For example, if company sales are steadily increasing year after year, that will be the positive upward trend. If the sales are decreasing, it will be the downward trend. Sometimes data might show no clear increase or decrease but remain steady or flat. Recognizing the trend is crucial because it tells us if the things are improving, declining, or staying stable over the time. Okay, now next we have seasonality. Seasonality refers to the patterns that repeat at a regular or a fixed intervals such as the daily, weekly, monthly, or yearly cycles. For example, ice cream sales usually increase during the summer months every year. These seasonal effects are predictable and helpful in a business plan ahead, like stocking more inventory before the holiday season. Seasonality is important because it helps us to separate these regular cycles from other patterns in the data. The third component is cyclicity. Cyclical patterns are similar to seasonality but different in one key way that their length is not fixed. These cycles often last several years and they are related to larger economic or business cycles. For example, economic booms and recession cause ups and downs in the data like employment rates or GDP growth. Unlike seasonality, which happens like clockwork every year, cycles can vary in length and they are harder to predict precisely. Okay, now we have the last component of time series analysis, which is also known as irregular or we can say noise. It is a random fluctuation in the data that don't follow any pattern. These variations happen because of unexpected or one-time events like natural disasters, a sudden market crash, or a major political event. Noise makes it harder to see the true patterns in the data because it adds random static. That's why identifying and filtering out these noise is a critical so that our forecast and analysis are based on real trends and cycles, not on a random blips. So why it is important to understand these four components trend, seasonality, cyclicity and irregular. By breaking down time series data into these parts, we can better interpret what the data is telling us. This helps us to make more accurate predictions about the future. For businesses, this can mean smarter inventory management, better market strategies, and improved financial planning. For scientists, it could mean better understanding climate patterns or disease outbreaks. Essentially, it helps us to make informed decisions based on the data. Look at some real world examples. The stock market shows trends. Sometimes price rise over years. Retail sales show seasonality. We see spikes every holiday seasons. The economy itself experiences cycles like with an expansion and recession occurring irregularly over the several years. And irregular components might be seen in sudden events like pandemic or natural disasters that impact data unexpectedly. These examples shows how TSA components are everywhere and important to recognize in many fields. To summarize, time series analysis help us to break down data collected over the time into four main components. The trend tells us the long-term directions. Seasonality shows repeating regular patterns. Cyclical captures irregular but longer economic cycles. And irregular or noise covers the random fluctuations. Understanding these help us to analyze, predict and make decisions based on the data collected over the time. Okay guys, thanks for watching the video. I hope this video has helped you to understand the components of time series analysis better. If you have any queries or want to explore this topic further, feel free to ask.